the Black Upstart.
Black people's $1.3 trillion.
It's the Black Upstart.
We're spending it making our own communities and our own businesses rich. Man, listen, this is Professor Keys, and today we're going to talk about how you can hire your kids. But before we get started, I want you to do me a favor and kiss the like button with your finger. Let's be real. You're already paying your kids. When you pay the light bill, when you pay for the room that they're living in rent-free, when you pay for food for them, when you pay for the roof over their head, when you pay the water bill, I bet your kid is running the water right now, ain't nowhere near the bathroom. So here is a way for you to pay your kids, not pay them back, but pay your kids in such a way where the returns yield six figures. Are you ready? Let's go through the steps. Number one, you must start a business that has the chance of generating revenue. Now, note how I didn't say anything at all about how your business must generate revenue. No, it just must have the chance of generating revenue, okay? Then you have to think through what type of legal designation you want your business to have. I highly recommend that you consider a single member or multi-member LLC. LLC stands for Limited Liability Company, and it allows for you to operate your business in such a way where your personal assets are separate from your business assets. Now, when you start an LLC, you're going to have to register your business with the state, and you will incur a filing fee. The other type of business that you can start is a sole proprietorship. And that is just simply you doing business as you underneath your social security number, okay? So you're doing business as you. Now you can register your business name as a DBA or doing business as, but that essentially just gives you a fake name under which to do business. So your child can write you an invoice to Mama LLC versus just, hey Ma, run me my check. Now folks may ask, well, which one should I start? Should it be an LLC or should it just be as a sole proprietor? Well, it's depending on what type of business you're gonna operate. If you believe that you might get into legal trouble, like you're gonna have your 8-year-old braiding braids and they get up on the edges and they snatch it off real quick, and the client, instead of spanking the little child's behind, takes you to court and sues you for 7 years worth of no edges, right? And you get found guilty, then if you have a sole proprietorship, then they can access your personal assets to pay that debt. But with an LLC, if you get into legal trouble and you get found guilty, then guess what? They can only sue you for whatever business assets that you own. So essentially, you're not held liable for whatever may go wrong in the business. Now, I know you're probably asking, but Professor Keys, what about child labor laws? I thought it was against the law to hire a minor. Well, not when you birth them and not when they're your kid. The IRS already recognizes that you're probably putting your kid to work anyway when they're vacuuming the floor, washing the car, cleaning their room. That's work. So they figure you might as well benefit from the tax code and put them to work for your business. Now, when you hire a minor that's your kid, there are certain tax benefits, meaning that you don't have to withhold Social Security and Medicare. You don't have to pay payroll taxes, especially since we're talking about you operating an LLC or a sole proprietorship. And also, you don't have to pay federal income taxes for any wages you pay them up to $12,400. Who knew that kid that's probably still running that water in the bathroom would be so beneficial to your pocketbook? Now that you've decided to put your child to work, guess what? You have to pay them fair wages. So that means, let's say you start a cleaning business and you hire your child to clean their first house. Guess what house that's gonna be? The one that they live in. So if you have them vacuuming the floor, mopping the floor, making the beds, doing the laundry, doing the dusting, you can't pay them a single dollar bill. No, you got to pay them fair wages. And you want to document the payment that you give to your child through an invoice. So instead of your kid feeling like a bill, guess what? Your kid will bill you, and the IRS will recognize that as contributions or wages that you've paid your child, okay? Now, I want to talk a little bit about age. Though your child can earn income at any age, I highly recommend, unless you can think of a specific task for a very, very young child, like a newborn or maybe a baby or a toddler, then maybe at the age of 6 or 7, that's when you can start putting them to work, right? Without the IRS having a critical eye. Now, I know some of y'all are like, but I have a 2-year-old baby, right? I have a 9-month-old baby, and what I'm trying to do is pay this baby so I can get the tax benefit. Well, babies can model. Babies can be food testers when they're testing baby food or formula, etc. So you would just have to get more creative. I want to make sure that y'all caught about what business y'all gonna start. You start a cleaning business, you hire your kids to clean 1 or 2 houses. The house that they live in, which is under your roof, or their grandparents' house, okay? Maybe even their auntie and their uncle's house. You just give them, again, their earned wages. You can start a landscaping business and assign your child to clean in one yard. Whose yard would that be? Well, the yard that they walk past in order to get on the school bus. And that would be the yard that you pay rent or mortgage to own or rent. Hello. So when you're thinking about your business idea, just get creative, okay? Get creative, because owning a business is all about you attempting to make a sale. Let's keep going. So next, you can pay your child up to $12,400 before you incur federal income tax. Now, where does this $12,400 number come from? Well, $12,400 is equivalent to the 2020 standard deduction, okay? So, up to $12,400 does not mean you have to pay them $12,400. So I want you to pay attention to the words up to. So you can pay your child $500, you can pay your child $1,000, you can pay your child $1,500. Like, you get to decide the amount, and the amount is according to your budget. Okay, mommy and daddy? Now, what do you do with these contributions? You know, probably when you were growing up, when your mom paid you a nickel, a quarter, or a dime, you took it, you put it in the piggy bank, you held it till you were like 15, even though you put the coin in there when you were 14 3/4, and now you just had the same coins that you deposited. Well, when you're paying your child through your business, you're able to deduct their wages from your taxable income. What does that mean? If you made $50,000 and you paid your child $5,000 through your business, you can subtract that $5,000 from your taxable income, and now your adjusted gross income, or the income that could be taxed, is now reduced to $45,000. And this is amazing because your child can still be claimed as a dependent on your taxes. So you see how this child is coming through for you, child, even though they probably still have the water running in the bathroom. Now, another thing that you can do with these contributions, other than reducing your tax liability, is deposit those funds into a Roth IRA. Specifically, it's called a custodial Roth individual retirement account. And I don't want you to get turned off when you hear retirement. Most people start thinking about retirement when they're about to retire. But the smart thing about learning to speak the language of wealth is that you want to begin thinking about your child's inheritance, about your child having old money while they're still young, and not waiting until they get old and leaving them with the responsibility of learning themselves. Remember, the good word says a good parent leaves an inheritance for their children and their children's children and their children's children's children. So with the custodial Roth IRA, the retirement account, that doubles as an investment account. So you can choose a mutual fund, invest in that mutual fund, and you benefit from accrued interest. Roth IRAs require that the account holders have earned income. And that's why we spent so much time talking about how you start a business and you hire your child. Now your child qualifies because they've earned income, and they can now deposit this money into a custodial Roth IRA account that you open on their behalf. And now that money, once deposited, can grow tax-free. You can deposit up to $6,000 $1,500 a year into your custodial Roth IRA account. Now remember, you can pay your child up to $12,400, but you can only contribute $6,000 to your custodial Roth IRA account. What you want to do with the balance is up to you. You can put it into an interest accruing savings account. You can put it into a UGMA or a UTMA account. You can put it into a 529 college savings plan. But with the custodial Roth IRA account, you can contribute up to $6,000 a year. Not unless your child is over the age of 50. Which would make you really, really, really old. So since we're talking about minors, you can contribute up to $6,000 a year, okay? Using a hypothetical example, let's say that you're contributing $500 a month over 11 years. So you start when the child is 7, you contribute $500 a month until the child reaches 18, 11 years later. Assuming a 15% annual return, you would have earned $150,000, and a substantial amount of that would be interest. And I know there's some of y'all right now that's saying 15% return. Oh my God, Professor Keys, that's way too much. Well, let's do another example, shall we? Let's say you contribute $500 a month when the child is 7 over the next 11 years until they turn 18. If the account returns 10% every single year, you will have $100,000 by the end of that time period. Now, I know a couple of y'all are saying, but girl, I don't got $500. I got you. Let's say you contribute $100 a month when your child turns 7, and you do that over the next 11 years until they turn 18, assuming an annual return, your child will have $30,000 at the end of that time period, and you can make qualifiable withdrawals in order to buy your child, 1, their first home, and 2, pay for any educational expenses, and finally to pay for emergency medical expenses. Now, I want to make this real practical for you. If you find a home for your child, let's say a single family home near where they decide to go to school, and the price tag is $150,000. If you get an FHA loan, which requires 3.5% down payment, that means that you can withdraw $5,250 from the custodial Roth IRA account in order to pay for their very first home. And let's say you want to take into account some additional costs that come along with buying a home. So we said the down payment, let's say closing costs, etc., just to buy the home. Let's say max you need to withdraw $10,000. You would still have $20,000 left in the account. If you never contribute one other raggedy penny to that Roth IRA account, and you let that $20,000 grow for the next 4 years, assuming an annual return of 12%, that account will be worth nearly $1 million. What an incredible gift to give your child. One mutual fund that I really like is stock ticker FBGRX, which is the Fidelity Blue Chip Growth Mutual Fund. This is a wonderful fund that invests in large capitalized companies or large cap companies that perform well. Some names that you might even recognize like Apple, Amazon, and Microsoft. Now, I hope that this was helpful for you. I'm hoping that you consider entrepreneurship because the U.S. tax code was set up for owners to win and employees to pay. So even if you never wanted to become an entrepreneur, owning a business has so many tax benefits that you wouldn't want to miss out on it. Okay? Make sure to kiss the like button with your finger and don't forget to subscribe for more videos.